Welcome back. We will now be hearing from Catherine Murray, host of The Buck Stops Here, to learn how the markets have been reacting this week. All yours, Catherine.
Thank you, Nathaniel. Welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing markets mixed today. The TSX is showing some modest gains following strength yesterday. The U.S. markets are trending lower today following strength across the board yesterday, up by about 1%. We are seeing the price of oil up a little bit higher today, on track for 5.4% weekly gains. We are also seeing the Canadian dollar a little bit lower versus the U.S. dollar, gold slightly lower, and Bitcoin up by about 1% to 2%. As I always mention, the cryptocurrency markets are 24/7, so don't hold me to that number. Away from that, and just taking a look at Canada right now, the TSX, as I mentioned, is mostly higher. We are seeing strength in industrials, communication, energy, as well as financials. The big market story, though, of course, this week is centered on the Bank of Canada raising rates by 50 basis points yesterday, the biggest rate hike in 22 years, trying to tame inflation, which is standing at a 30-year high. Canada's policy rate, therefore, now stands at 1%. It came as the same day that New Zealand's central bank raised rates, and U.S. Fed speak this week is basically telegraphing once again to expect a 50 basis point rate hike in May. The BOC, the Bank of Canada, is forecasting global growth of 3.5% in 2022 and sees the policy rate to return to normal, and the normal range being about 2 to 3%, could even go higher if needed. The governor of the Bank of Canada also pointed out that the unemployment rate is at its lowest in 45 years, so doesn't have a concern about stagflation and does believe that the interest rate is moving higher and will do its job to tame the demand and tame inflation without causing a recession. So that is the big news here in Canada for sure. A few stocks to watch. Baytex Energy was upgraded to an outperform from sector perform over at National Bank, sending that stock up by about 7%. Surge Energy also upgraded over at National Bank. And Cogeco reported better than expected earnings, helping that stock perform today as well. Away from the BOC, we also, of course, are taking a look at those U.S. markets and seeing a little bit of a pullback today. Growth is underperforming value stocks. Bank earnings are front and center in the United States, coming in better than expected, but really getting muted investor reaction or trading action following these results. Goldman Sachs, as well as Morgan Stanley, beat on better earnings, better trading, I should say, and also expense control. Citibank came in better than feared, and Wells Fargo stock is under pressure following their most recent results. They have been hit by weaker mortgage banking and higher provisions. U.S. economic data out this week saw retail sales up by 0.5%, slightly below consensus expectations, but still up 6.9% year over year. Big demand in the United States from the consumer. Also, consumer sentiment rebounded in April. A few sectors and stocks to watch in the United States. Twitter is on everybody's focus point today. Received a lot of attention, getting an unsolicited takeover offer from Elon Musk. He recently disclosed his 9.2% stake in the company, and this week offered to buy the entire company for $54.20. That's a 54% premium over the day before he started purchasing his 9% stake. He also, however, went on to say that this is his best and final offer, and if it's not accepted, he will need to reconsider his current position as a shareholder in the company. Away from that, Delta was upgraded over at Barclays, helping that stock. The analysts there are noting rapid recovery in travel demand, which is more than offsetting the higher fuel costs. We're also actually seeing some of the reopening trades perform very well lately. So think hotels and cruise lines as well as gaming. We're also seeing steel and aluminum and commodity chemicals perform well in the United States as well. The bullish narrative continues to be inflation has peaked. The market can withstand rate hikes, that the U.S. Federal Reserve will not cause a recession, and or the Bank of Canada for that matter, and that the economic data is coming in strong. Away from that, of course, the bear case continues to be the ongoing Russia-Ukraine crisis, putting pressure on the price of oil and therefore inflation, and that the central banks cannot tame that inflation, and it will cause and roll over into a recession and potentially even a global recession. Away from that, as we have a holiday weekend, next week is going to be very busy for Canada in terms of economic data coming out. CPI will be the number to watch on April the 20th. Consensus is for 6.1%. Nathaniel, I'll leave it there. Back to you.
Well, a full week this week and a full one next week. Thanks for that, Catherine. For more information on the markets, be sure to tune into The Buck Stops here with Catherine Murray. Well, up next, news from around the world, so stay tuned. We'll be right back after the break right here on Forum Daily.